Hello, everybody. Kirk Spano here. Let's start with a little Jedi wisdom. Jedi uses the Force for knowledge and defense, never for attack. That kind of applies to investments. The problem for most people is that they focus on playing offense first and not defense. They don't do the reading. They don't look to the future. They don't take care of what they need to take care of now either. Adventure, excitement, right? Traders. It's what most traders are looking for. It's an addiction. I say that as a person who plays a crummy level of professional poker, and I see the addiction out there. I see the people who make bets they should never, ever make. And then when they win one, they go, see, I told you, even though they're losing 2 out of 3 times. Not a great equation. I'll take the other side of that bet and win 2 out of 3 times. You have to be patient to be an investor. The stock market is a machine for transferring wealth from the impatient to the patient. So again, I tell you, unless you are a star trader and taking advantage of the other 4 out of 5 people, don't trade. Use the volatility in the stock market to find opportunities to invest when good and great assets, primarily great assets, you'll accidentally get good assets, so you don't target them. Focus on assets and businesses that are or appear to be on the way to being great. And you're not going to get them all right. If you get 2 out of 3, as Meatloaf taught us, ain't bad. And in fact, if you get 2 out of 3 right, you're going to get really rich. As most tax records show, and as most billionaire investors know, is you don't have to be right a lot, as long as you avoid big mistakes of consequence to your bottom line, and you have a few great investments along the way. You nickel and dime, or to mix our metaphors, which is one of my greatest skills. You just keep hitting singles and taking walks until you get a pitch you can hit out of the park, or at least to the wall. And those investments are out there. Most of those investments today are in the small and mid-cap space, which is historically normal. The historically abnormal period of the last 20 years, where it's the large caps, and really just since right before the financial crisis, where the large caps led the way, appears to be over. Doesn't mean there won't be great large cap investments. Just means that the historical norm of the last 100 years is probably back, where the small and mid-sized companies outperform. And again, you have to qualify that for quality and growth and all that stuff. But on aggregate, small and mid caps have outperformed large caps for a century. But recency bias is that large caps have been the place to be. And when money was super cheap, that made sense because you could buy bigger things. Think of it like a house. If the interest rate is 0, or let's say 3%. A lot of people got mortgages in the 3s. Very easy to buy a house that's $600,000, even if your household income is barely into the 6 figures. But once interest rates jump up to 6%, that $600,000 house requires either that your income, goes up by about a third to be able to afford it, or the price of the house has to come down about a third if your income is relatively the same, if you're buying new. So in a tighter money era, large caps are going to be hard to invest in because there won't be enough leverage and cash to buy such big things. It's pretty simple. I encourage you, and there's a bunch of these websites out there. Parade seems to have the least amount of crummy ads. Go read the Yoda quotes. If you haven't watched The Empire Strikes Back in a while, go watch The Empire Strikes Back. A lot of great life lessons in that movie. I would say that The Empire Strikes Back is the best Star Wars movie ever, just based on the writing and the acting. It will help you control your emotions. It'll help you look to the future while taking care of what you need to take care of today. And it is clear to me, as volatility and uncertainty in the markets is higher this month than last month, and it probably will be a little worse next month, unless it's not, and then it'll be a month after that, or a different month. People don't deal well with uncertainty. People don't deal well with volatility. They get breathy and emotional. And I'll be honest with you, I'm fucking tired of telling folks, look, short-term price movements in stocks on a daily or weekly basis just don't matter. They don't. What matters is what the big money is doing. What matters is how businesses are executing. And you can't tell that on a daily basis or a weekly basis or even a monthly basis. I met with an investor last week who insisted that he was a good trader. I was like, okay. He said, I don't really need to own anything long-term because I make so much money short-term. I was like, okay, I've heard that before. What am I going to hear in a year? It's only going to be one of two things. I guess there's an outside chance at a third. It's either going to be that he guessed right for an entire year and is a millionaire now. Put odds on that. Or it's going to be crickets. Put odds on that. I have had since 1998 and 1999 people telling me that they're trading the market and making great money. That when the bear market comes, or when they screw up, or when they get out over their skis, when they do something they don't quite understand because, hey, it was up yesterday, so I'll do more of it today. They lose a bunch of money, and then I hear crickets. It is the rare person who will say, yeah, I screwed up and lost some money. I had somebody tell me that actually yesterday. I tried it. I screwed up. I lost money. They learned. That person's going to end up making a lot of money in the future if he heeds Yoda and controls his emotions, doesn't mess with the dark side, right? When you look at the dark side, trading, better be careful because the dark side looks back. 4 out of 5 people are not cut out to be traders that are trading. They don't have the education. They don't have the experience. They don't have the capital. They don't understand reflexivity. If you're trying to trade and you don't understand the concept of reflexivity, you better put that damn clicker down. If you're an investor, short-term price movements move you emotionally, then you're letting the dark side traders, the narrative creators that are amplifying their book-talking message using the internet, it's going to mess you up. You'll get scared, and then you'll get angry, and then you'll get to the point where you just hate stuff and people, and then you suffer. These are pretty powerful, not only investing and trading lessons, but life lessons. I had a lot of people I was angry at earlier in my life, and I found, mixing a little Lion King in here, that you better put the past behind you. If you don't, you get stuck. Ever go to a bar and not talk to anybody and just sit there and listen to the conversations going on around the bar? What do you really hear? Do you not hear the same stories over and over again? People who are stuck. Click, click, click. They can't get through it. And the answer is right in front of their face a lot of times. The person next to him goes, well, why don't you just do this? Well, I can't. You don't understand. Well, I understand. I understand you're stuck. And until you decide to be unstuck, you'll remain stuck. Somebody comments in the chat here. My friend is an experienced day trader, worked in Chicago Options Exchange in the past, does day trading for a living for the last 10 years, and he has blown his account up twice. He does not recommend day trading if it's not your full-time job. Neither do I. If you are a great trader and you have the introspection, like, honestly, I keep referring to Teresa and Shooter. Shooter, has made a science out of it, and Teresa's on her way. They do it full-time. They have the circumstances that allows them to do that. They've become amazing. You should pay attention to them in the chat rooms. But introspection is a big part of it. All right, I screwed up. Should I blame everybody else, or should I say, what did I do wrong? I once took a class when I was an insurance salesman from a guy named Van Miller. If you ever had an insurance license, you probably have heard of this guy. He was a top of the table, whatever the club is called, Millionaires Club or whatever the heck it was. He was like one of the top life and annuity insurance salesmen in America, something like 15 years running. He was the top salesman in the country. So this guy was going around people's houses, selling annuities and life insurance. Probably a lot of it that wasn't completely necessary, but he told a good story. He's a great salesman. One of the things he said in his class was, if somebody leaves me as a client, it's something that I did or didn't do. That's it. That's where he left it. And with trading, it's usually just people don't understand what they're doing and they get emotional and they overtrade. It's that simple. For investors, so they let the short-term narrative cloud their long-term view. And that happens to a greater degree when people haven't done the reading on what they're investing in. Now, I know everybody says, well, I don't have the time. Well, then you should stick with ETFs. Teresa mentioned that in the chat today. And using ETFs, which lower your top side a little bit, but raises your bottom side quite a bit, is a great strategy. If you just use the ETF strategy that I put out there for you, because you just don't want to take single stock risk, because you don't have the time to go read their presentations. And I'm not even saying you have to read their whole 10K. You should, but if you don't even have the time to read the PowerPoints once a quarter, and then, there's usually an update of some sort. If you can't put an hour a month into each company you're invested in. Don't buy stocks. Just don't. If you have a 30 stock portfolio, that's about 30 hours a month that you got to put into that. Just is. Every single company I own has a margin of safety. Now, sometimes the management screws up so bad that they blow through it, such as life. We've had a half a dozen companies that have hit the shitter in the last 3, 4, 5 years. Only one looks like they'll go bankrupt. We're long gone out of that one, way before that. The other 4 look like they survive, but they may or may not ever throw anything off to the shareholders, right? Companies might stay in business, but the shareholders never make any money. I mean, that's not uncommon. But then you have a batch of others, and you say, okay, what's the margin of safety of this with this one? Ametis has their conference call in about a half an hour, so we're going to make this a short call today because I'm going to listen. Their earnings were about what was expected. You know, people quibble over a few $1 million in one direction or the other. It's just stupid. Price of diesel fuel went down $1. That's why their revenues were down. Their expenses to build things went up because they're building stuff, right? So their earnings went down like a dime or something. But who cares? What's the big picture there? They have assets that are more valuable than not only their debt, but all the expected capex combined. So net of assets, it's a company that's debt-free and already has the money available to finance everything they need to build. So listen to it. And here's what you're going to hear. They're going to describe their 5-year plan. I have asked them to address the value of the assets and what they could monetize them for if they have to. So I hope that they do that. He's already hinted at the last 2 conference calls. And they have investor presentations coming up with big banks. So when you go through our 4-step process, find the big secular trends. Decarbonization is one of them. Probably is the biggest one. And then you follow the money from the government and from the feds, from the Federal Reserve. And you say, hey, is the government on their side? Here's how on side the government is to all the companies getting into decarbonization or following through on plans that have been developing for 20 years. The Europeans are pissed off at us that we're giving so much support to it all of a sudden. It's amazing to me. For 20 years, the Europeans told us that we weren't carrying our weight on decarbonization. The Democratic Congress passes a bill. Joe Biden signs it into law. And suddenly the Europeans are telling us, oh, you're supporting your decarbonization industry too much. It's making it hard for us to compete. Isn't that kind of an interesting flip? So Ametis has secular trend on their side. The government is throwing money at them. The company on the fundamental side has more assets than the value of their debt and their future capex combined, but the stock is beat to shit. What does that sound like to you? Sounds like an opportunity to me. And you can go through all of our companies, and that is what you will find. So every single one of our companies has a margin of safety. Doesn't mean that it's always enough. And they have somewhere between 1 and 5 catalysts that can drive the price up substantially over the next several years. If you let the noise from the narrative-making traders, all these people who are talking their book on the internet, and you'll be more impacted if you haven't done some homework, right? You'll get more emotional with less homework, right? There is an inverse proportion there. The more you study, the less emotional you'll be. The less you study, the more emotional you'll be. You'll ask questions about why did it go up or down today. Somebody like me will try to explain to you about trader narratives and reflexivity, or somebody like me will say, can you quit fucking asking that question? Depends on my mood. So this is actually the macro show, but I wanted to talk about investing and trading yet again, because we are about to enter a more volatile period. Why? What if I told you to watch in the economy as the signal for whether or not we're going to get a recession or a stock market crash, right? I mean, I put it on the screen, Vince. So yes, the answer is unemployment. So layoffs are up, mainly from the tech companies, because they're the ones that overbuilt during the pandemic. And I don't know if they really overbuilt. I think it's pretty clear, really, that we should go back to what exciting thing was 3 years ago, CES 2020. And I reported back to you that AI was on the verge of taking middle skilled and middle management jobs. And that's exactly what's happening. If you had a keyboard job that was middle skilled or low skilled, AI is starting to take a lot of that work, or at least making it 5 times more efficient. So it takes less time for one person to do it versus 5 people doing it. And organizations are becoming more horizontal because the AI can keep things in line, less browbeating managers standing behind you. And that's where the layoffs have been. So if you were a super skilled coder The reason you got let go is because they just really didn't need you, and you're going to have no problem finding a job. But I'm going to tell you something about psychology. These layoffs that are happening in the first and second quarter are right before summer. And a lot of these people made pretty good money, lived somewhere that was expensive, and now they have the opportunity to move around and not live somewhere that's quite as expensive. A lot of it's in San Francisco, where I'll be in May. I made that trip an extra day. So I will be in San Francisco on May 2nd. I'm meeting with somebody on the 3rd. And if you're in San Francisco, I'm happy to meet with you. On that Friday, I'll be meeting with the executives from Ametis and checking out their facility. The way unemployment's going to work is that the layoffs will stop soon, probably by summertime, because all the right sizing will have been done. We will be to the point where the Fed can start hinting that it's about to back off. Remember a month ago, I told you the Fed was going to be really mean in March, and here they are. They're really mean in March. Now I'm telling you they're going to start getting nice late in the summer or around Labor Day. Why would I say that? Because all the numbers are going to let them do it. Unemployment's going to look a little bit worse in the summer because all these people who are getting laid off going into summer are going to take the summer off. You know that it happens. You know people who have done it. I had Jolene do it. Why on earth do you go back to work in the summer if you didn't have to? And these are mainly high-end jobs that are being lost. These folks will only go back to work if they have to because they're going to take the summer off and they're going to go to the park. And they're going to go hiking. They're going to fly over to Europe. They're going to do some things and recharge before they go back. So the unemployment numbers are going to look a little bit worse over the next several months. The Fed will back off going into Labor Day, around Labor Day, a little before, a little after, hard to know. But that also coincides with the end of the drive season. Airline prices just came down because fuel costs just came down, which impacted Ametis. But those are going to go back up because all these folks who got laid off have the money to buy an airline ticket. So if you're looking to buy an airline ticket for something, do it quick while they're cheap. A month from now, they won't be. And we're going to fight with the inflation that is mainly being caused by OPEC, Russia, and China until we have more alternative energy online, which is happening really fast. And more supply chains have been built out, which is happening really fast. And we're just in a transition period. And at some point, the Fed's going to go, good enough. Something's about to break or something's breaking. We're going to back off. Again, around Labor Day. So between now and then, and whether it's September, October, hard to know, you need to buy stocks. Because what's coming soon is a massive, massive bull market. One of the things I'm looking to get into is buying one of these buildings. And why am I thinking about that? It's because it's happening. What if I told you for 4 or 5 months now? Is that these loan resets are going to cause big investors, a lot of REITs, to give the keys back on buildings. And the Uber bulls, the ones who pray to the REITs, are going to say, oh, such a smart decision. They're so smart. Yeah, but now their revenues and their earnings are going to fall, which is their AFFO for throwing off dividends. And the dividends probably go down. Oh, that's bad. What have I showed you charts for over and over before? Is that most REITs do not outperform the stock market. There's a small subsegment of industrial REITs, specialty REITs, and some residential REITs that outperform over the long term. Everything else is cyclical, minus the extra expenses that are built into REITs. There's a big skim going on in REITs. So unless you're in the handful of industrial and specialty and residential REITs that can't be disrupted, they have not outperformed the stock market. So do not pray to them and do not be emotional about it. There is a REIT that I'm looking at. I think it's going to get much higher in the future. That's a hint, but it might go down a little lower in the short term. So I'm looking at that. All these things with employment and interest rates coincide. We are just in the middle of a cycle. It is not the end of the world. It is very investable if you just scale in slowly with an idea that by autumn you probably should be fully invested. Now, if the correction jitterbugs and takes into next year, then that's the answer. So we have to keep up with what's really going on. But from what I can tell, stock market's going to bottom out by autumn, could be by spring, who knows? But the Fed's going to have to back off by autumn, or they risk having unemployment go out of control for a little while and breaking lots of things. But here's why we're in for a gigantic bull market after that. The United States is in such good shape. We're going to be at full employment for a very long time in general. There'll be hiccups because there has to be. Fill your mouth up too full and drink something and somebody makes you laugh, you get the hiccups. So over the next few years, we're going to do training programs. We're going to do this, that, and the other thing to get as many people into the labor force as we can. But the reality is the labor force is not going to grow that much because the attrition from the baby boomers is going to offset it. Let's just figure out a way to work around it. And the way to work around it is you just let 20 million people into the country. We have no shortage of space or resources or jobs, and they'll build their own houses probably. Tom Lee is on the same wavelength as I am. That gives me a lot of hope, even though hope is not an investment strategy. But I see a very long-term economic expansion and stock market boom because we're going to be at full employment. That means people are going to be pouring money into their 401ks. And that's going to go into the stock market, right? There's mandatory enrollment now. And yes, there'll always be waviness and the madness of crowds because 4 out of 5 people are just emotional creatures. But what I want you to be is more of a Jedi. I want you to control your emotions. I want you to learn and operate from a position of knowledge. Put aside ideology as best you can. Don't make investing into a religion. If you have to assign a movie theme to it, Jedi is a great one. Or if you're a little darker than that, make it some sort of cold-blooded killer sort of thing. Your job as an investor is to make money. Your job as a person is to spend it well. So as I make more money, I already know the name of the foundation I'm going to start. You may just want to help a niece or a nephew with college. We're starting a business, or one of your kids. Look forward, understand the world's been getting better since the dark ages, understand that AI is going to free up a lot of our time and generate a lot of wealth. Even with the AI, we're short on people to do the work because as you have seen, the last bastion of wage inflation is in services because we don't have enough people to help other people. So if you have a teenager who's like, I don't know what to do in the future, everything sounds so hopeless. Tell them, hopelessness is bullshit. The world's getting better. It's been getting better for centuries. And let me tell you a story about my life. This is what I saw as a kid. We all thought it was hopeless. And now look, and if you really want to add some impact, tell them the story when they're sitting in a restaurant eating something really expensive or on a boat or on a trip, whatever, at Disneyland. The world's getting better. We're going through a transition phase, which people hate. I think prices are going to go lower on the large caps. I think the small and mid caps are just chopping around right now. You should be buying the dips on those. All right. I got to log into the Ametis call. I hope you join me and listen for them to answer the questions that I asked, which was, what are the potential for a joint venture on their RNG operations? And what are the opportunities for monetizing the India plant versus just running it long term? Because there's 3 options there. And I don't know which way they're thinking, even though, the CEO mentioned a potential IPO to me that I wrote about. So there you have it. Have a great day.